Welcome to Super Tuesday here because we got so much to cover. I'm only going to do a really brief opening here. We're going to talk about the WWDC. We're going to talk about the Qualcomm Pop. We're going to talk about some low float trading and what to do, what not to do. OpenAI, IPO, what stocks to trade, what not to trade with that. New gas coming on 8:35. We'll keep you guys in suspense. It's a Tuesday on pre-market profit.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, let's get to these charts brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for serious AI traders. Okay, folks, we're in the green here. Choppy day ahead of the rollover in the S&Ps. We can talk about that a little bit, but we're back up 27 and a half handles, 74.4350. The buck pulling back after a little bit of a down day yesterday, down 31 cents, 99.71. TLT up 22 cents, 84.84 ahead of the CPI tomorrow. USO, war over, down 217, 132.96. GLD and SLV consolidating near the low of the move, folks. What does that mean? Bitcoin futures, big day yesterday, trying to put in a double top, maybe a double top here, down $775. It's 62,700. Well, Triple D, we are out of earnings season.
Are we?
Well, Oracle.
Never out of earnings season. Earnings just goes forever now. They spread it out here. We used to have like a whole month where it was like nothing reporting, but they'll always give us a big stock. And we're going to get Oracle this week, Adobe. We're going to get a few, but there's not a lot of earnings to talk from last night. There was Vail Resorts, which didn't get any snow. So somebody in the chat actually was all over that. Did we find out who that was? Brentster, who that was that gave that comment? Oops, sorry.
Hi. Good morning. I thought it was it Meredith? It was one
Meredith,
of our lovely.
I don't know who it was, but
one of our lovely ladies in the.
They're like, there's been no snow. There's no way Vail Resorts can beat earnings. Oh my goodness, this is a good call. I don't follow Vail stock very much, MTN, but true. No snow is not good.
Well, you know, also what I heard like the tickets are just for like day passes are just crazy. Like crazy expensive.
It's a trendy.
Skiing is expensive.
I hate skiing.
My kids go continuously. Like we get the pass to the local mountain, and because when you're up here in Georgian Bay, you can ski 6 months of the year. So.
Have I ever told my skiing story?
Oh my gosh. Are we starting at 8:03 in the morning? Okay, do it. You got like 2 minutes. Put the clock on timer. Go.
Okay.
Big screen.
First time I
Drum
seriously,
roll.
at least I should be listening to this one. The first time I ever seriously went skiing is when I first met Lisa in college. So I was a senior in college. And she's like, oh, let's go up north. Our friends have a cabin. We drive up north. She slaps some skis on me. And I'm like, do you need any help? No, I don't need any help. Okay. Do you want the bunny hill? No, I don't need the bunny hill.
Bunny hill.
Okay? And so I get up on this hill, okay, and I go down. Into the right is for beginners, and the left you don't go down unless you're Ingemar Stenmark. I don't know if people remember Ingemar Stenmark. Okay, so I look straight down, and I am just going. And of course, you're supposed to shush, right, to slow down.
Yeah,
Just
total face. Wiping out, skis going over me, people freaking out, you know. And Lisa pulls up. She goes, are you okay? I go, maybe we should give that bunny hill a try.
And then they were married for a long time after that.
Like, this guy skis so poorly. I just have to help this guy. I have to help him through life.
Poor guy. Through life.
It was fun,
thank
man.
you for.
And you've never been back skiing since.
No, we've gone a few times, but you go skiing with the kids, you carry the skis, you carry the boots, you carry all this stuff. By the time you get to the hill, you're tired, you know? whatever. But all right, come on, let's get to the
Okay, we're done. That covered the
up.
MTN earnings, so that's all we got for you.
That's what you get on pre-market prep, man.
That's what you get. We're not covering a lot of earnings today, but let's cover the recap of yesterday because we were talking about, the market fluffing up. Then you had the little defluff for a couple of days. The tech bear market of 2026 lasted one day. And now already we're in the refluffing stage here because when you look at stocks like Micron, you look at stocks like SanDisk, you look at all these stocks coming right back up. You can't keep a good stock down. Start here, Joel, just with quick technicals on Micron, and we do have to talk Apple. We're going to head there in a second.
Oh, quick technicals on Micron. Does it really make a difference with Goldman Sachs raising their price target to 900? Does it really make a difference what my technicals say?
It does.
Come on, you're getting your money back. That's all. This is my technical analysis. If you bummed when it was at 1089, when it went to like 850, and you said you wanted to sell it when it get to 1,000, well, this may be your opportunity.
Second chance.
I have absolutely no.
So you're two hands out of that. We're 993 right now. You're saying this 1,000 level. I like the setup there, like as resistance now. Broke through, come back down, retest. Oh, we just can't get. We'll go 1,002, hit a few stops there, and then come back and collapse. That could be a setup. I mean, go to the overall market. It wasn't really a great day yesterday. It's a pretty good overnight session here, but it wasn't a great day for the Qs. I mean, if we start with Qs and not the SPY,
okay.
Air the SPY, both. We kind of had an inside day. We didn't kind of have an inside day. We did have an inside day. And sometimes we have inside days. That means, to be determined going forward here. I didn't like that we closed near the lows yesterday. But one thing to consider on both the SPY and the Qs, a lot of this was Apple's fault. So, I mean, if you take Apple out of the equation, it was probably a pretty good day for a lot of stocks yesterday. But Apple, we know, had their event, the WWDC. Brentster, can you highlight a few things from this? Because Apple was doing okay, holding up ahead of the event at 1 o'clock, and then all of a sudden, rug pull central here.
Yeah.
What did they say?
And Dennis, I think it was notable when you got back to your desk in the afternoon, we're looking around and I'm like, oh, did you look at the Apple chart? And you looked at the Apple chart and you're like, oh, now it makes sense what's happening in the broader market a little bit.
Yeah. Because I was gone in the afternoon and then I got back at 3:30 and I'm like, oh, market give it all back. And then you look at Apple, it's, this is it.
Makes sense. So a few things that were released, they released the Mac OS 27 Golden Gate. There was a lot of discussion about Apple child controls. There was discussion about Apple intelligence. This, as far as I could tell, was when the stock started popping. If you're looking at Joel's 15-minute chart over there, it's kind of even hard to see it over there on the 15-minute chart, but the stock started popping when they started mentioning Apple intelligence. And then like 5 or 6 minutes later, I think this is what happened. They put a name to their AI efforts, and the name is Siri AI. We all know Siri. We all know who Siri is. We all know the crap that she does every once in a while. So I think when the market started going, oh, they're just gonna like turn Siri into AI. Oh, screw that. We're out of here.
Siri right away. So I came back to my desk and then I'm looking through it too, and I was like, are they just keeping Siri and just updating Siri? Is that Apple intelligence? Is that what we are so excited about here? The market is not. So they needed a rebranding here. Tim Cook, I know you're leaving and everything like that, but I mean, before you leave, rebrand it. The Siri brand is awful. It is associated with stupidity. People honestly go Siri and they're annoyed with the answers they get. You think about how many great answers we get from Claude. You think about how many great answers we get from Gemini. You think about how many great answers you get from ChatGPT. We ask Siri the same questions. It can't even give me an address for the place that I'm going. It is awful. And you know what? Maybe you're going to improve it. Excellent. Rebrand it, though. Call it something new. A rebranding was absolutely necessary here, and they did not. They're calling it Siri AI. That is awful. I don't care if it's the best thing on the planet. You can't call the best thing on the planet, Siri, because it's just associated with stupidity.
Yeah.
So they needed to rebrand it. And that is, my friends, why the Apple stock started tanking. When they mentioned Siri, that is when on the call, if you go and look at the timeline, that is when it started going down tremendously, because the market's not stupid, but Apple apparently is.
We had the wonderful Nick Brown in the Stock Trader Network think tank who was covering the WWDC event live in the chat. It was like its own little news feed. You just sat in the chat and you got your updates right there. And one thing that he highlighted that I want to highlight here, and then I want to highlight what Fee's sentiment was, quote, Siri is now profoundly more capable assistant that helps you find what you need and gets more done. It's also more conversational, so you can go back and forth like never before and get detailed, engaging answers. That was said by, I don't know if it was Tim Cook, but it was one of the execs on the call. Fee said that the event started getting sort of really dicey when they were using examples of how Siri AI could like help you get recipes for a party and stuff like that, like non-innovative stuff completely.
Let's get recipes for a party. What the hell? Are you in 1999? Like, the internet could have did that. Like, this is like not innovative whatsoever. This is not AI. This is called search. This was created way back by Yahoo and Excite. I mean, get with the times here at Apple. So yes, it's another rant coming at you here. I am an Apple shareholder. I think they're positioned well because hardware is like, they're the hardware company. They have the biggest moat, maybe the widest moat of any of these companies, because we're all got iPhones here. Give us AI on our iPhone, like solid AI, and we make it never leave. Like, this might be the place, but you're kind of pushing me away. So,
you guys are complaining about Siri. Okay.
Yeah.
I'm unhappy with Alexa. I am very unhappy with her. She's slow. Okay.
But they have Gemini now, at least.
Okay. So I asked Siri, all right, like Saturday, like the Tigers always play, like, the schedule with baseball, right? Friday, Saturday, Sunday, sometimes Monday's a travel day, Tuesday, Wednesday, they have the travel days and everything. And they're home. And I said, Alexa, what time do the Detroit Tigers play today? This is on Saturday morning. She said, the Tigers' next game is Sunday at 1 p.m. I'm like, and I go, what that? I go, they got to be filling that park up on Saturday. Okay. So of course, a gorgeous day in the summer, they don't have a Saturday game. And so I went and looked, and of course they had a Saturday game. So I'm happy with Alexa and Siri. They're both
But they have Gemini. And Gemini is usually going to get it right. If you would ask Gemini, you'd probably been okay. The problem is Apple doesn't have Gemini. We need Gemini. We needed Apple Intelligence to not be Siri part 25.
Yeah.
We needed Apple Intelligence to be like the branding of like to go against OpenAI, which we'll talk in a second, to go against Claude, to go against Gemini. Siri is still just going against Alexa. These are like old search products that are searching with your voice. So we need something new. We need something exciting. The market was disappointed. The market has spoken here. The stock is down. And I mean, we could say the stock performance has been unbelievable and they keep winning. But really, Apple's stock performance has all been about what you would say, Joel, is financial engineering. It's all been about buybacks and milking the cash cow that Steve Jobs gifted to this company way back in 2011. If Steve Jobs was still alive, do you think Apple is still messing around with Siri? Do you think that this is their big innovation, Siri AI? No way, man. Steve Jobs was the innovator of innovators there. And to be honest, what have they really created since the iPhone? What have they created in the last 15 years? It's been 15 years since Steve Jobs passed away. What have they created? The stock's gone up, and you can say, well, Dennis, you're wrong, the stock performance. But that's been all buybacks because of Steve Jobs gave them the biggest cash cow ever on the planet. Steve Jobs created that cash cow. What has Tim Cook created? What has been created at Apple? It's so disappointing when they talk to me about Siri AI. I almost want to just go and just sell the stock.
What did Mr. Ives have to say?
I do have a little color here from Dan Ives. Let me see if I can pull it up here real quick.
Let me guess, it's bullish.
Well, Ives always bullish.
He said this WWDC was the start of Apple's foundational AI consumer platform shift as it works to deliver what it promised 2 years ago with a more robust AI strategy and the announcement of Siri AI, which we believe will elevate the way its 2.5 billion iOS user install base interacts with their devices for the AI era. Overall, this was an impressive event that did not disappoint as Tim Cook and Apple finally unveiled an AI strategy that will unleash the true monetization opportunity for AI in the Cupertino consumer ecosystem after a few years of promise. Now, it's finally here.
Okay, technical level, you're only going to get one level out of me. I mean, key reversal, a Dennis key reversal, right? A new all-time high. Technically, key reversal. I'm not calling the top like I did call the double top in the S&Ps at 76.32 1/4. But I will just say, let's see what the street has to think about this today. And I'm getting marked from yesterday's closing price because I really, it was unimpressive. So that's where I'm marked from. I'm saying you got to get above that close. That close is 301.54. Probably can't have an inside day, right? You already took out yesterday's low. So we'll let the street decide. Are you going to rally, get back above 301.54 and go back to all-time highs? Or did you create a big set of bag holders here ahead of the event?
Bag holder central, a little bit, at least from the short-term day traders. Long-term investors, I get it. Kramer's already said, own Apple, don't trade it. All the fun stuff there. I do own Apple in the long-term count, but I'll tell you, I was disappointed as a shareholder. Okay. Qualcomm. This market is funny, man, and the information is all over the place here. But Qualcomm starts popping last night. Something fierce. I'm like, what is it? And everybody's looking. What is the news? I'm like, it goes 220, 222, 224, 226, 228. I'm like, what's the news? I'm like, oh, there it is. And Kabisi report. The Kabisi letter tweets out that Jensen Huang is at an event and he said, buy Qualcomm. This is true. This is true. That's the tweet that started popping the stocks.
We're pretty sure.
We're pretty sure there was another.
Dennis, did you listen to this?
Like this?
Did anybody listen
in a second. I want to just continue the point. Get to in a second. But so this is why the stock starts popping. Multiple news sources are citing this. Starts going up on this. Then we find out, though, that actually this comment, which was very Joel, comes into the chat and says, this was already out. And I'm like, what are you talking about, Joel? This is just said it. He's like, no, search Twitter further. And we do. And who had it? Who had it earlier? It was not widespread on Twitter.
No, yeah.
At Amet Investing.
Great call. Amet Investing.
Amet.
And it was out 5 hours earlier. So it went hot like last night. It just went hot, the story. And I didn't hear about it earlier either. It was like he had said it earlier. But you wanted to talk about the actual comment. And it wasn't really like buy Qualcomm. It was a little bit different. How did it go, Joel?
Can we play that or will we get permanently banned from YouTube?
We can probably play it.
How about you just pretend to play it with your own voice?
Yeah, then we won't get fined.
All right, so he's talking about phone chips, okay? And in that the premise was that is NVIDIA going to get into phone chips? And he said, no. He goes, Qualcomm is a good company. They do a good job. That was his initial comment. Okay. And then some joker, and I don't even know if this is AI modified. I don't even know if someone goes, should we buy Qualcomm? And he's like, yeah, buy Qualcomm. Like out of joke. He goes, I'm really good at promoting other people's stocks, And so he said it in jest. He said it in jest. It wasn't even like he didn't say it was $1 trillion company.
It wasn't like Marvell last week.
No,
but that's what people wanted, and that's what people were dying for, right?
Well, it took him 5 hours to figure it out. It took him 5 hours.
Unfortunately,
because the comment, like you said, wasn't that strong, and then all of a sudden it took a PC letter, which is widely followed, to highlight it. So everybody's like, "Oh my God, did they say it again?" And it started going nuts, and it went to 237. And we're not saying Kabisi letter, they just we didn't know it.
They were just reporting.
They were reporting. We didn't know it was 5 hours earlier either. Like it wasn't widespread. I went on Twitter. There was literally 2 accounts that had mentioned this out of the millions of accounts. So it just wasn't widespread. But you're right, Joel. It wasn't like, oh my gosh, go out there and buy it right now. It wasn't the same. So it shows how itchy these algos are, which is going to get us into algo madness from last night. But 217, 220, 222, the algos see boom. They're like, oh my gosh, the algos just start buying. The algos started, and then everybody's looking at the move, and they're like jaw dropping, and they're like, what is it? Because we don't see it. A filing, like, we got our news feed, Brentster, you're watching. There's no filing. Like, is there an analyst commentary? Was somebody said? And then we see this, and we're like, well, this makes sense. But then it was 5 hours earlier just because it never got widespread, that comments, because he didn't really say buy Qualcomm. He was doing it tongue-in-cheek just after, obviously, the comment from the person who was listening in the audience.
Yeah.
So kind of taken out of context to a certain extent by social media. It wasn't like another Marvell. Not saying Qualcomm, that he doesn't like Qualcomm. He obviously does like Qualcomm. But, we kind of thought this was the next Marvell, at least for a few minutes there when the algos went nuts. And maybe that's not the case. So
I don't know what to tell you to do now. I mean, I know, Dennis, you tried a short and it came back in for you. That kind of move, I
lost on it. It kept going up. I was like, well, this is old news. I'm going to try the short here. And then it just went up. And then I was like, okay, well, forget it. I'll just take the loss and move on.
Yeah.
But, and it did come back in 20 minutes later. It started to leak back. But yeah, crazy.
One technical note here, even though we had a much higher day in the market yesterday overall, and I'm talking the day session without the old tweet, you did make a lower low on the move at 215. You went to 214.63 yesterday. You're up now, but keep an eye on that. And not only a double bottom, but that's a triple bottom here from May 22nd. So there's your trap door in Qualcomm. You're $7 above it now, but we'll make that a 9-star here in Qualcomm. 9-star support at 215.
Okay, so we don't talk low float stocks very often on this show. We're not, a penny stock show here. But, we're highlighting the Qualcomm algo move. Yep. There was some algorithmic action last night after hours in the low float, some of the China names, some of the other names, but they were just going like mad. Fee was highlighting them in the STN think tank, and I'm like, I don't even understand some of these moves. And stocks were going up 100, 200%, and then tanking it all back down, and then going back up again here. One that just went absolutely berserk last night, ZTG. Zenta Group, and it's down 12% last night. You don't see anything on the charts, and you'd be like, what are you talking about, Dennis? There was no moves at all. Oh no, these charts are for real. Like, I don't know why after hours they decide on a few of these names, but there was like a dozen of these things that went crazy last night. Like algos going berserk. I couldn't find news. We were looking for news on these things. We couldn't find any news. Bradster, these low floaters though. Just give us a little summary. Sometimes these things come out and they just go.
That's over the years, it just feels like the main reason these happen is because there is a more informed group of traders that are pushing around a stock or pushing around stocks, and a less informed group of traders that are kind of like they're kind of just getting blasted by that more informed group. So what happens, I think, what I've always assumed is these people are kind of like cornering these stocks and kind of like forcing trade in it, and other people get caught up in it. We should note that these kinds of things are happening in the market that we're all trying to trade and learn in. The thing that I do when I see a crazy stock that I don't recognize the ticker on moving like crazy, especially after hours, the very first thing is check the float. And if you have a float that is under 1 million shares for sure, that's very low float. Generally, about 20 to 25 million shares in the float, I'm considering that under low float territory, meaning these things could be pushed around a little bit, and maybe you see this crazy price action like we did. I just put the list in.
Yeah, put the list of the ones from last night. We're going to highlight a couple of these, though, just because these moves were just littering my scanner. I have a scanner that's just showing, and obviously, we show that, in the STN think tank, and it's showing all these stocks just go crazy. But the ZTG, Joel, Fee highlighted this one. Went from 250 last night up to over $12. And now it's back at 250 like nothing happened. All in one night. Joel, you're on mute, but all in one night. I have no idea.
1279, 1279.
Crazy. But then, the party just continues. Like MTEN was another one. That one went berserk last night. Just quickly show the charts on these because these things were nuts. We'll just fly through them. But I'm like, I don't know what's going on. That went from like 2 to 5 and back to 2. Like not as much as the first one, the ZTG. RGNT was another one. That one's still up 100% this morning. But if you bring up this one, RGNT, Roger Golf, Nancy, keep the list up there so Joel can just read them. Keep them up there because, look, this thing goes from 1 to like 5, back to like 2, then up to 7, now back to 2 again. These are hundreds of percent moves here happening overnight here. I mean, you just fly the next one. ABTS was another one here. I mean, I'm not even trading in these things. I'm just looking at them and like in awe. I actually tried to trade one of them and I was like, I think I lost immediately. I was like, I don't know how to trade. These things are crazy here. But the moves are nuts. And I don't know, a lot of them not driven by any fundamentals at all. Just, madness. And sometimes what you see is algos, we're in a bull market where we ramped right up, refluffed, and you start seeing this stuff happen. But INHD was one everybody was talking about yesterday, Joel. So bring this one up here. Say that slower,
Dennis. Talk slower.
INHD. So
India,
this was one
November,
from yesterday. India,
Hotel
Nancy,
Delta.
Hotel, David. Look at this thing. It went from $1 yesterday to up over, I don't know, how high did it get there overnight?
65 and change.
Yeah, now it's back at 38. I mean, these things are crazy.
66, 69.
Crazy moves.
The crux of these moves, I will just say, here's another little warning, really is in place when there is, quote, news on these names. These companies will issue releases. They're just trying to highlight something. They're not actually disclosing something material. They're just trying to get the name out there a little bit. And then these traders that I think profit from these kinds of trades, they'll point the rest of the market. Look, this company had news. Here it is. They issued a press release. It's right here. This is why the stock's trading higher. And most of the time, those releases are not material. It's just a distraction. So we're given some good warnings here. The last thing I just want to say on this is I'd never say stuff like this. Don't chase these names. If there's a takeaway from this, just don't chase them. If people want to trade these, awesome. Don't chase the move.
It's just so dangerous. And the moves happen so violently. Like sometimes these things during the day too, they limit up. So they go like, after hours, actually, they don't have the bands. So you don't have the limit up, limit down going on. But these things open and they halt. They open, they halt. And you're going to get in a situation where you can be in something. You can't even get out of it because it keeps halting limit down on you, and everybody else is trying to get out. So it's not like you can even hit the sell button. So it's really tricky. So the danger and risk in these things, which is why, we've never been a penny stock show. We never talk about this stuff. But, this is still a story in the markets. And as speculation continues to rise in these markets, you're seeing more and more of these moves. So you got to be careful, just trading all this stuff.
Fee in the background is wondering, just to ask, pose a question here real quick. Fee is going like, does the removal of the PDT rule have anything to do with these moves? I don't have an answer to that, but I think it's a worthy question to ask. Any thoughts?
Are the markets changed because of the PDT? I tend to think it's bigger players moving this stuff around, not somebody that's got like, if somebody with a $2,000 account be chasing this stuff. I don't think it's initiating it, and we don't know who is behind these moves. Maybe it's just algos going wild. Like maybe some of these algos are just going off, and some people are running the algos.
Run away.
But probably some people behind these moves. But we just got to be careful with the stuff. That's all. That's all we wanted to highlight. To be cautious.
I think just going back to like the who's moving these and behind the moves and the PDT rule.
Yeah.
I don't know what it's like at different brokerages, but like I think they do require a lot more money to be trading after hours and pre-market and stuff. So
that's a good point.
Or maybe they could trade. I mean, I don't know all the different platforms and what the entitlements are to. But I'll go with Brent's theory on the story getting started, the lemons coming in, and then getting squeezed. So
Yep.
that's, I think, very good. Good talking points there, Dennis and Brentster. We got our guest coming up early, waiting in the background. If he gives us a thumbs up here, let's go. We got a new guest coming on here.
All right, awesome. Here we go.
Prep. Now we can talk some real stuff with Jeffrey Buchbinder, VP, Chief Equity Strategist for Research at LPL Financial. Jeff, I saw you tuning in a little bit earlier. How you joining the show so far?
I'm enjoying it, Joel. Thanks. Excited about this market. A lot of opportunities, a lot of movement.
Yeah,
no doubt.
You are, but you recently downgraded tech to neutral while staying overweight equities. Tech, oh my gosh. What do you think? You think it's become too stretched, or do you see other opportunities in the market?
Yeah, we just think tech needs a little bit of a cool down period. We're talking about S&P 500 level tech. We look at positioning data. It's not just valuations. It's not just PE ratios, although those look actually fairly reasonable for tech high level. It's also positioning where you're looking at just the institutions loaded up on tech stocks. And we just think we got to the point where there wasn't
crowded.
The odds were low that we were going to get big money moving in again and, sending the stocks another leg higher. So just cool down, downgraded from overweight to neutral, shifted into energy. That might just be a few month move. We think the market is getting maybe a little too optimistic about how fast oil can come down. And so that means that maybe inflation will be a little bit stickier than people think. So, nothing dramatic, still overweight equities, still want to be in some of the high quality defensive type names that might hold up well during the summer, might benefit from a rotation. So that's what we're thinking. Not a bearish view at all. Still overweight equities. Just want to shift where we're taking our risk a bit.
I mean, crowded trades 101. Tech has just exploded. I mean, fundamentally driven here. Micron fundamentals, unbelievable. SanDisk fundamentals, unbelievable here. I mean, they rally, or they say down, up like an escalator, down like an elevator. Thursday and Friday, we saw the down like an elevator, where a lot of these stocks were beat up. My phone lights up. What's happened to Micron? What happened? And I'm like, well, it's kind of crowded trades 101. We've been going up. We're up, 200% here in 2 months. We get, a 20% fall, and people are like, oh my gosh, this is the end of the world here. Now, you're downgrading here. Do you see, it's always hard. This is the hardest thing to call tops. So when you're coming in and you're saying maybe it cools off a bit here, you trying to call the top, or you're just saying this trade's too crowded, maybe move to the sidelines here. So you're saying you're not bearish. Just give us more clarity on, the downgrade on tech, because obviously everybody seems to keep piling in here.
Yeah, well, keep in mind, tech is almost 40% of the S&P, right? So if you're neutral tech, you've got a pretty big slug of it. And, whether you look at sentiment data, whether you look at positioning data, whether you look at the size of the moves in semis, in particular memory, right? The magnitude of these moves is very, very rare. We've all heard the comparisons to the late 90s. You really have to go back in many cases to the late 90s to find parabolic moves like this. Now, as you alluded to, it is fundamentally driven. The earnings in some of these names have gone parabolic too, just like the stock moves. But it just, to us, seems prudent to take a little bit off the table, right? Have that sort of market weight tech, and then maybe wait for a little bit of a pullback. But we're talking about maybe, a 5 to 10% kind of a move down as a normal summer kind of a cool down. That's what you get typically during midterm election years. We, of course, have a lot of uncertainty still in the Middle East, still have oil prices over $90 or right around 90. There's just a lot for this market to work through. And then it's also hard to call upside if we get a ceasefire, right? How many rounds of this have we gone through in the Middle East? How many more times can the market rally because a deal is close? Frankly, we're getting a little bit tired of hearing a deal is close. We want something sustained. That just hasn't come yet. So it's just a little bit foggy here over the next 2-3 months. Stepping a little bit to the sidelines, but still recommending investors stay fully invested here.
Jeff, a familiar theme in our show here since the war began is like we don't know how high oil is going. We don't know if it's going to 200. We don't know if if they open the straits tomorrow, if we're going to be flooded with oil and it's going to go back down to 77. We have no idea. Okay, but you guys upgraded energy last week. Do you think that market participants are underestimating how long elevated oil prices could last? Especially with the way things are going in the Middle East.
Yeah, we do, Joel. If you open up the strait tomorrow, it's going to take a lot of time to actually get those tankers to their destinations and clear the log jams. And as we've talked about now for a couple of months, it's not just oil that's stuck, right? It's fertilizer, it's various other chemicals, petroleum products go into plastics, right? It's a little bit like COVID, obviously a different situation, but the supply chain bottlenecks in COVID took quite a while to clear. So we're thinking in terms of a 3 to 6 month process to get the market closer to normal once the strait is cleared and stays cleared. Of course, as you allude to, we don't know when that's going to be. But if you look at the futures curve, I mean, oil is, potentially going to be still north of $80 toward the end of the year. The stocks are cheap if oil is above 80 at the end of the year.
All right, moving on here. You recently went to some exposure in low volatility equity strategies. Is this protecting gains after a strong rally? Or do you think that VIX, you think we're getting more volatility in the second half of the year?
Yeah, this is a short-term defensive move, right? If you buy a low volatility strategy, or some call them minimum volatility strategy, you are going to get, some of the consumer staples, utilities, healthcare names that haven't been doing very well recently, right? We all know what's been leading this market. It's been AI names. Some of these names that have been left behind, we think could get a little bit of a bump here as we get a rotation. We've seen this a couple times, over the last year or so, right? As that rotation takes place, I think you get some gains in those areas, the underloved areas of the market. Take a break on the tech, still maintain exposure, but then potentially move back into tech later this year. That's how we're thinking about it. We're not talking about swinging for the fences here. We're just talking about, solid dividend paying stocks that people really haven't wanted that can be sneaky good here in the near term. And if we do get that pullback, broad level pullback or pullback in tech, we'll probably end up going back in because the AI trade isn't over. We're going to get $1 trillion in CapEx next year, most likely. At least that's the plan. So if the money is there and the market is still enthusiastic about what AI can bring, and you actually get that investment, then these stocks are going to make another big run. We just don't think it's in the next few months.
Low volatility names, could they benefit some of these utilities, drugs, staples? Could some of these companies benefit from AI efficiency, like, the headcount coming down where, and obviously, we're talking AI and there's been no AI story in the utilities, no AI story in the staples. But if we go into an AI efficiency trade, maybe later this year or into next year, could other sectors or other companies start benefiting from that? Do you think that story could get some of these other stocks that, have depressed multiples, and some of them have very depressed multiples? I think about the food stocks like Conagra, General Mills. These things got 8, 9, 10% dividends. They just go down every day because nobody likes them. Maybe it's margins getting squeezed. Maybe it's, GLP-1s and people aren't hungry for snack foods anymore. But some of these stocks like General Mills up to an 8% dividend. Conagra is up to a 10.67% dividend. These are low vol names that keep going down. What turns the narrative around here?
Yeah, it's a great point. AI is going to drive productivity, not just for tech stocks, but for all types of companies across industries. So, hopefully we don't have too much job loss, but you're going to see companies maybe hold headcount over the next year and still drive additional revenue opportunities with AI tools. Healthcare is probably the most interesting one to us. We know we have a lot of inefficiency in healthcare. So there's a lot of opportunity for companies, healthcare institutions, to drive efficiencies there. Drug discovery is a big beneficiary of AI. So we like that story. We think that has some long legs. But you're right. Just look at any company that's making widgets and selling them to consumers. A lot of opportunity for more productivity. And one of the things that at LPL we missed this year was just how much in productivity gains we were going to get right away. I mean, we had thought when this year began that maybe 2027 was the year of AI adoption and AI productivity. But just look at margins. I mean, frankly, nobody got this earnings ramp right, right? Nobody thought we were going to be, pulling 2 years of earnings forward the way we've basically done in 2026. But the margin expansion continues to come through, and the analyst community thinks it's going to be a steady move higher over the next at least a year. It's hard to see much beyond that, but certainly at least a year. So that is absolutely a support for this market, and it should help some of those underloved areas where people aren't really getting very excited about the AI story. That's the AI next act.
All right, so you just think overall investors are being complacent here? Well, even though we're trading at high valuations, the earnings are going to justify that, right? Is that what you're looking for in the market over the next few years?
Yeah, they're hard to predict next few years, but yes, absolutely. The odds of recession here in the next year are very, very low. We have essentially 2% of GDP that's already kind of in the bank, right? Because you got the fiscal stimulus from the One Big Beautiful Bill. You've got this AI investment, which is happening. We really don't need too much more to keep this economy growing. Now, you could ask the question whether the 800 billion will be there in 2026 for AI investment. Companies are starting to raise debt. So sure, that's a risk. But the economic outlook looks very, very good. The Fed is a risk. The market, as I'm sure you all know, that if you look at history, the Fed cutting rates is certainly more positive. And when you get hikes that start a hiking cycle, the stocks just slam on the brakes. It's pretty much foolproof. So if we just get maybe a one and done hike, the market can probably manage through that. But we'd like to see just the Fed stay on hold and maybe get cuts toward the very end of this year and into 2027. That we think can provide a very good macro runway. Then you put the AI story with that, and this could be, this bull market could run for absolutely another couple of years. We could see that quite easily.
Jeff Buchbinder, chief strategist over there at LPL Financial, joining us for the first time on Pre-Market Prep. Thanks, Jeffrey.
Happy to be here. Thanks, guys.
Thanks, Jeff.
All right, moving along here. Want to talk some more AI?
Why not? This is what the market is driven by. And we got some news yesterday. Looks like OpenAI dropping or potentially going to drop the S1 here, Brentster?
The report was that they're going to file confidential S1. And that's what we saw.
SpaceX, exactly what SpaceX did.
Yes. And also we heard a report, I believe, don't quote me on this chat, that Anthropic wants to do a confidential submission
Same
also.
thing.
So maybe this is just the way that these big IPOs are going to do this year. The S1, just a little quick education. The S1 is the formal official SEC Edgar filing for the prospectus for a stock that is going to go public via an IPO. Confidential just means that they have filed this, but the SEC hasn't made it public yet. So in the example here, the report OpenAI, the S1 is out there, but I don't think we have access to it yet. What does it mean for people that just want to trade some of these IPOs? I think it just means that we are a little bit more limited on information. This prospectus, the S1, has so much information about the company's businesses, the financial statements, about the IPO itself. We're just a little in the dark here on that for OpenAI.
So Money Mitch prepared this graphic a while back. We brought it up when we were getting OpenAI news a month ago here. Let's bring this graphic up again here because there's a number of ways to play this pre-IPO. Obviously, the stock's not out there. We're going to get SpaceX this Friday, so you don't have to worry about the pre-IPO exposure map here. But for OpenAI, we do. So we can look here, and there's a number of ways to play it. If you look in the middle column, these SPVs, these special purpose vehicles, These are the way, a lot of investors have been playing these things, including ourselves. So there's a few of them out there. The Robinhood one, RVI, has some exposure. Also VCX, which we know is wildly above NAV. It's up here today too. And then DXYZ. But you can see all these stocks, these are trading higher here today. RVI up substantially here this morning because it's the most well-known one that they had some OpenAI exposure here. And it's trading up 8% here this morning. So it's moving up just on the prospects, and it's come down significantly from where it was on, this S1 being confidentially filed here. So, the buzz gets around it. Does that mean these stocks, these ETFs that are investing, they're not really ETFs, they're investing in private companies, continues to go up, forever? No, it's probably not the best way to play them once we're past IPO. So these are pre-IPO plays, not really post-IPO plays. Why? Because a lot of these are trading at premiums because it's easy access to these companies here. So you can't go in here and trade OpenAI right now, but you can definitely trade RVI. So what we saw happen with DXYZ, it went really hot there for a bit because the SpaceX was really hot, the talk of it, the coming of the S1, the anticipation of it. And then, as we get closer now to the actual SpaceX IPO, which is coming on Friday, the premium is coming out of this name. So if you see DXYZ is now kind of crashed back down because it was trading way above net asset value. Again, net asset value is a tricky thing when you're investing in private companies because, you're taking, estimations of where the valuation is. But, it was around $20 to $25, and the stock exploded up to over 70. So, that's where, the buzz carried it probably where it shouldn't be. But once people can go and actually buy this thing in the open market, SpaceX, the premium probably gets sucked out of here a little bit. Mm-hmm. So I would say these, vehicles and that, people are using to trade are good vehicles, and they're speculative vehicles, but not post-IPO. Once these things come out, premium kind of gets sucked out. That's what we're seeing happen with DXYZ right now.
Yeah, I think, Dennis, I know you don't have your trade blotter in front of you, but you just the way this DXYZ evolved, and this was, I don't know, back in April, maybe? I think it was still under 30. Yeah. You were talking about it, and you played it long, and you played it swing, and then
it's sat forever. It's sat for we were in this for a long time with no action.
And then I know you were getting active, but I don't know, was it maybe around here you just said this is starting to get wild,
getting silly.
You lost your edge is basically what you said. It became more unpredictable. And well, it went to 70 twice on that. You could have been a hero. I think you did sell some at 71.99, didn't you, or something like that?
I got out on one piece of some of the trades. So I was day trading. I was also obviously swing trading it, but I was trading. I wasn't investing in DXYZ. But it was a lot of fun going up there. But again, pardon me?
Now look at it.
But this is the premium getting sucked out ahead of the IPO. So when you're just days before it, this is trading at a premium because it's the way to get exposure to SpaceX. We don't need that exposure to SpaceX come Friday because you can get exposure directly to it. So that's what we're trying to say is these vehicles seem to do very well pre-IPO, but then post-IPO as it's coming in, the premium could come out. Now, again, you've got to be relative. Like VCX is one that went really nuts. The net asset value on this one is around 20. This thing back in May, and not even May, March, went up to over $500. Then it reinflated again back in May because they got some exposure to SpaceX. People are excited about Anthropic. They've got some exposure to some of these companies here. And, it reinflated here too. But we know eventually these companies, look at MSTR. Maybe this was the best example of this as well. MSTR has all this Bitcoin exposure. People were playing it. It was 2-3 times its Bitcoin holdings because you couldn't go out and buy Bitcoin unless you go open a Coinbase account. You could do that, but you couldn't go buy an ETF. Once the ETF came out, that premium got sucked out. Kind of the same thing happening here with some of these things as well. So they, again, when it's trading around NAV, so my DXYZ was, well, it's got NAV at 25. I'm buying this thing 26, 27, and has a potential for, some run up here, maybe ahead of the SpaceX IPO. I thought it might be worth $5 or $10. It goes $30, $40, way more than I thought, was going to do. So, when these things go, explosively higher, you ring the register and you move on. But, DXYZ was a great one for us. Obviously, there's been a lot of other trades here too, RVI, but a lot of these things have started coming back down. I think as the SpaceX IPO gets closer, the premium starts to come out of these things.
Shifting gears just a little bit here. Carmen in the STN think tank saying she's looking at sats today on the SpaceX IPO, and Ed, one of our favorite traders in the STN room, with some good info here, saying SKM is one to keep on the radar, has been moving on OpenAI and Anthropic news, has a stake in Anthropic, and had a nice pop last night on the OpenAI headline. SKM. Ed and Carmen, thanks for a couple great little tidbits there in the STN think tank.
And it's always good. We've had this conversation before too, to look at what's the percentage of exposure though. Like people will say, oh yeah, you know, well, Google owns a piece of Anthropic, so Google's going to fly on this. But when you say, yeah, they have a big piece of it, but Google is such a massive company that in the big scheme of things, we added up and it's like 1% of what they've got. So, I mean, they might have more, they have a bigger piece of Anthropic than a lot of other companies do, probably bigger than DXYZ, but relative to DXYZ's assets, it's a huge portion. Relative to Google's assets, it's almost nothing. So don't expect, 20, 30, 40% moves in something like Google. Probably same thing for SKM. I have not. Thank you for letting us know. We can go dig down in the think tank and look at the exposure here. But I mean, it's all about what, how much exposure is relative to your other assets. It's not about how big your position is overall, because the Google position is huge in nominal terms. But Google is such an enormous company that on percentage basis of their own assets, it's next to nothing. So it's not going to move the needle for them.
Right. All right, we do have some more stuff we can go over here. A couple things that I want to make sure are on the audience radar. We had GlaxoSmithKline, GSK buying NUVL last night or this morning. Also, we had a contract from by Applied Digital, APLD. That was last night. Dennis, Joel, where do you guys want to go here with a little discussion the last
Interesting that it's the Tuesday merger. We usually see these on the Mondays, and then my XBI trade would work because I believe NUVL was actually in the XBI, and it's up 1.35% here today.
Yeah.
So, but not the case. They did it on the Tuesday. I did not have any XBI overnight, but usually you see these mergers on the Monday. NUVL, big pop up. I mean, it's pretty much done there. GSK, not really moving much on it. Maybe it's a smaller deal for them here. Obviously trades as an ADR over in Europe here. So I don't think there's much of a trade here for these stocks.
Not a big deal for them. Also, I think the price is 124. So this time value of money here. I don't know when this deal's supposed to close, but 122.90, unless you think someone's coming in with a better price. I mean, there's like no 124 with that price and trading 122.90. This looks like this deal's done. Interesting. The price action in NUVL, people did not get the memo here. This thing had an absolutely horrible day.
They kept this one quiet.
Yeah, look at this day that this thing had. Going from 110.39 to 93, continue its way down to 83.49. So, man, if you sat this one out and you want to wait for either a better bid or another $1.10, I don't know about that. I don't know if there's any companies that are benefiting or hurting from this going on. Other things on the radar. This looks pretty specific to these two stocks. GSK not trading down much at all.
The APLD, we can cover that really quickly here. So they had a contract, Brentster, last night. I believe you broke this news in the STN think tank, and the stock popped up substantially, obviously. It's up 12% here this morning. It's a hot story, too. When ice cold back in March and really hot here, we've had this whole fluff, and defluff a little bit for a few days. Do all these companies re-fluff? I mean, that's the question here. I'd say some of them guilty until proven innocent. Like I like Joel Micron 1000 number looking at resistance here. I mean, until you make new highs, the refluff is guilty until proven innocent here. APLD, it's a huge down move, goes from $50 to $36 in 3 days. Now trying to come back here, but probably a lot of overhead supply here. No, Joel?
I love this area. I love this $45 area for a couple different reasons. Number one, it was just you had a day where it was the low and then it opened up. Next day was the high. Now it's a bounce back halfway. Brett, is this really material to the this is a big deal for the company, right?
It seems like it. The metric that I like to use is if there are terms disclosed in a press release. If there are terms disclosed, it means that the company views a deal or M&A or whatever it is as material for their financial statements. That was the case here. They announced a deal for 210 megawatts a 15-year deal for a lease. And it says this represents approximately $5.2 billion in base term contracted revenue, or approximately $12.7 billion if all renewal options are exercised over a 30-year total term. Also, if you look on Joel's 15-minute chart, if you look just a few bars back, you'll see some volatility there, right? There's a couple, yeah, exactly, up there. So what happened this morning at 7:55 is the company announced a debt offering. They announced that they are going to offer $1.59 billion in senior secured notes. Debt offering does not imply dilution for equity shareholders. So I am assuming some of that volatility that Joel circled on his chart was because humans or an algo read offering, maybe started selling it, didn't know that there was not going to be any dilution here to equity shareholders, and the stock kind of popped back up some of that selling and trading around $46 here.
Brent, is that senior? Is that means that older people can participate?
Yeah, you're good to go on this one, Joel. You should, you should look into it.
65. Well, I'm not 65 yet, so okay.
Not a lot of ratings here for a Tuesday. You'd think there'd be more. Maybe there's going to be some coming out tomorrow night. Usually the biggest days for ratings are Mondays and Tuesdays. Maybe the recent market volatility has the analysts spooked a little bit here. There was some commentary from Lululemon on Citigroup, though, which is interesting because, we've been looking at this one, like the stock just keeps getting worse and worse. It doesn't participate in the rallies. It seems to go down. They have an earnings, and it's just no good there at all. So Citigroup comes out today and lowers their price target from 185 to 130, neutral rating. They see no, what was the commentary? You had it, Brentster.
What did they say? They said they see no easy near-term fix.
That's the problem. I mean, like it's 8, 9, 10 times. But again, we talked about this. It was 10 times earnings, and then they lowered by like 10%. The stock was down 10%. It's still 10 times earnings. I mean, they're fully in the Under Armour Nike like death roll here, where the stock is actually starting to go down the earnings, and that means the stock's really going to start to fall here too. It's just such a mess here. So Citigroup not on board here. I love a good turnaround story. We, like you were saying, you like the yoga.
Who was talking about this on Friday?
Comfy, you could trade in them. Pajamas.
Who was talking bullish on this on Friday?
Some troublemaker.
Did it rally?
Dad, you don't remember
my eyes? Maybe I can see a rally
on Friday.
Remember
Friday? I was talking. You don't remember?
I remember you talking about. I just don't see the rally. I guess.
What do you mean there's a rally? It opened up right near its low on Friday.
107.99.
Okay.
Joel.
I guess it's a rally.
That's a
rally.
We're in.
I don't know where the heck this thing.
So you're fading Citigroup. Are you going long Lululemon?
I'm already long Lululemon.
You're long the whole world.
No, I got Lululemon clothes. No, I'm gonna go buy.
You don't have
They're
the stock.
so nice.
Yeah, just have the clothes.
Yeah, no, I don't own the stock. You know what we got to do? We got to dig up Aaron Bry. And remember, he used to talk about this stock. But anyways, we'll see. It may fill the gap someday, and that's not investment advice. 123.67. First things first, getting through the previous day's high. But if they start buying dogs, who knows? Who knows what's going to happen? Okay, Brentford,
TBD. Wait. TBD wants to talk CBRS, and I want to talk it to Cerberus Systems here because the stock had obviously, a leak, steady leak since the IPO. So you're just looking at it, $386 all the way down to under $200 just on Friday. Nice pop yesterday. The pop continues here this morning. Craig Hellum starts it at a buy, puts a $325 price target on it. Is this the refluffing of CBRS, Mr. Elconin?
Not enough data here for me to. I'm going to go back to our beloved friend. I don't know if people know he passed away, I believe, last year. Fari Hamzy, and he used to say, "I don't have enough data," and we don't have enough data on this. I'll just go with the Eric Kroll. Never buy on the first day, right? If you bought on the first day, hopefully you sold on the first day too. Let's see if we could get back to this 291 area. That's halfway back. Consolidate, look to your, we're popping again here. Dennis, watch your offers here. We just made a new high.
It's a 38th Iran deal.
38. Do we have the count?
37. CNN said it's been today.
Well, now
They said 37 times. He said a deal's imminent.
I think 37
separate occasions.
Let's see. Can we update it in real time? Can we update the counter in real time?
Is it 38? Is it 38? Now it's 38. We're imminent. Deal imminent. 9 o'clock news dump here too is always interesting here too. Sometimes I think we should stay on past 9 o'clock just to get to the 9 o'clock news dump here because that's when a lot of stuff comes out. There's like 25 press releases.
Chat, we have a rubric. Rubric launches Rubric Agent Cloud for Anthropic's Claude code RBRK. Just a press release catching my eyes here as I'm glancing to the wire. Rubric with another few releases here. They're doing a bit of a release here. Chat, if we did the show, like let's say through open, maybe to 9:45 a.m., who would love tuning in? Let me know in the chat. Give me a 1 if you would love tuning in.
Just stay right on. We just like extended show.
Weird.
We tried this for a little bit. We obviously do it over in the think tank here, but we're just feeling you guys out a little bit. We're here for you. We're here for you.
Real quick, 3 quick previews here. Thanks to Michael Feehan. Always. We have Datadog, an event today. Keynote is going to be at 10 a.m. I believe they're doing a little bit of a weekly event for DDOG. Cloudflare Net is going to be doing their investor day at 1 p.m. We also are going to have the IBM CEO who's going to be speaking at a Mizuho conference today. I don't have the time for that. I can get y'all that in a little bit here. We got a lot of ones in the chat. We got a lot of ones.
It's unanimous. I haven't seen any too. So it looks like everybody wants to extend
coming on tomorrow. We got CPI
we will keep that
data.
in mind.
That should be fun. With our CPI data tomorrow. Folks, thanks for joining us here on Pre-Market Prep.
Awesome.